Gerard, thank you for joining us today. OceanaGold will produce over 460,000 ounces of gold this year from 4 different mines, and I want to examine each of these mines, beginning with Haile, which is the largest asset with annual production at over 170,000 ounces. Haile is an open pit mine located in South Carolina. Can you just provide an overview of production year to date, along with cash costs and also the all-in sustaining costs at Haile?
Sure, thanks, James. Look, Haile is our largest producer and also the primary provider of our growth over the next few years. At the halfway mark of the year, we released our results a week or so ago. It had produced bang on half of its full year guidance. It produced a little over 90,000 ounces and its guidance is 170 to 185,000 ounces. It did so at an all-in sustaining cost of around $1,400 an ounce. We're guiding to a full year guidance of $1,500 to $1,600 per ounce. So it's had a strong start to the year. We expect the third quarter to not be so strong at Haile because it's transitioning between pits, but then we expect to finish with a strong final quarter for the year.
And you made mention of the fact that the all-in sustaining cost guidance for the year is between $1,500 to $1,600 per ounce. This is extremely high for an open pit mine. Maybe you can just elaborate on why it is so high.
Yeah, Haile has a very high waste to ore strip ratio from its 3 operating pits. But what's really exciting about Haile and exciting for the company and its shareholders is that we're shortly about to unlock the ore feed from the underground development that's been going for just on almost a year. And it's really exciting because its waste to ore ratio is inverted. And so to put some numbers to that, you know, the open pit has a waste to ore ratio of anywhere between 10 to 12. That's 10 to 12 parts waste to 1 part ore. The underground, we're going to have, you know, 1 part waste to 8 parts ore. And the grade from underground is 2.5 times higher on average, you know, on a reserve basis than the material from the open pit. So we're moving from this 3 open pits with a high waste to ore ratio to about 20% of the ore feed going to come from this underground ore source that is much higher grade, lower waste. And that's the primary driver of a quite significant reduction in the all-in sustaining costs at both Haile, which also powers the all-in sustaining cost reduction of the group as a whole. That underground ore source, Haile Underground, we have said will be feeding the mill in the 4th quarter of this year, so we're very close and looking forward to showing over time as that ore feed ramps up to its full run rate, getting that leverage benefit of that grade and improved flexibility of material movement in the pit, because that's something else that also impacts the operating costs of Haile presently. It historically has been a very constrained site, so there's a lot of material rehandle. With the expansion permit that we got recently, that's allowed us to expand our footprint, and that's going to give us in time much more flexibility and lower the amount of rehandle as well.
And when the underground component is up and running in full production, which aspect of the mine will be or contribute more to future production, the open pit aspect or the underground?
We still expect that the open pit ore feed will be the larger ore source. The underground will represent around 20% of the feed to the mill. But because of that, you know, that grade being, as I said before, 2.5 times higher than the open pit grade, you know, for a constant rate of material processing through the mill, you're going to get a significant increase in gold production and reduction in the all-in sustaining cost.
And Gerard, in terms of exploration, maybe you can give us an overview of what you and your team are going to do at Haile.
Sure. Like right now, we are drilling Horseshoe Underground. That's a Horseshoe Underground measured and indicated is the only material that we have in the mine plan at the moment. But there is some inferred material, so we're looking to kind of bring more of that into the reserve. So that's target number 1. We're also further drilling Palomino, which sits off near Haile underground, but not contiguous with it. We're doing further drilling work to expand its reserve size and hopefully bring that into the mine plan on completion of a pre-feasibility study that we're in the process of doing. And then we have further new target generation drilling that's near the existing ore body. And we're spending about $7 million in total this year on those 3 programs of work, all of which is in service of bringing more higher grade, lower waste material to the mill, and that will obviously have continue that benefit that we're seeing from Haile underground material that we already have in the mine plan. Less waste to ore ratio, higher grade, which powers the future of Haile.
The second largest asset in terms of production at Oceana is Didipio, which is located in the Philippines. Can you provide us with a brief overview of this mine and how it's performed in the first half of the year?
Sure, James. Yeah, Didipio is a fabulous asset in our portfolio. It's a porphyry gold copper mine, generates strong free cash flow due to its low all-in sustaining cost. It had a strong first half. It's trending to be producing at the upper end of its guidance range for this year at a low all-in sustaining cost of around $600 an ounce. So clearly, with gold prices being where they are, it's able to generate a lot of free cash flow for us. It's a stable producer for the company. It's the nature of the ore body, and together with the fact that we have a large inventory of open pit stockpile materials, allows us to be fairly predictable, and that copper credit that we get it contributes to the low all-in sustaining costs as well.
And you and your team have also implemented an optimization study. How is that progressing?
It's progressing well, and I'm really excited to be able to bring that to market in due course. Presently, we're mining at a rate of around 1.6 million tonnes per annum, feeding a mill of 4 million tonnes per annum run rate that we use at the moment, with the difference coming from open pit stockpile material. So if we're able to increase the feed from underground, that's much higher grade than the open pit stockpile material. All other things being equal, we can increase production of gold and copper and lower the unit cost. So our target is to have at least 2 million tonnes per annum coming from underground. And again, to compare that with the 1.6 presently, that's quite an uplift. And that study we expect to complete internally by the end of this year and hopefully release to the market in sometime in 2024. And again, the leverage potential of more gold from underground is really exciting at Didipio.
You have also undertaken a very aggressive drilling campaign at Didipio to expand the resource. Can you provide details of this program? How many rigs, how many meters do you plan on drilling?
Yeah, look, we're planning to drill about 20,000 meters this year, and we're well underway there. It's really exciting because this is an ore body, as I said before, a gold copper porphyry. It's open at depth in all directions, and in recent years we haven't done as much exploration as the ore body deserves. Now we're back into it with a very accelerated program, looking to define what exists there underground, and we put some results out in December which showed that there was mineralization that at good grade, better than reserve grade, adjacent to where we're presently mining. So anything that we can do to again bring more higher grade material from the underground ore body is really exciting. We're also doing drilling, or looking to do drilling, near mine, and again, that's the best place to find another gold mine is where you've already got one. So we're looking to get access to areas near the mine as well. And again, it's a very prospective area, and we're very excited about the future opportunities both at the mine and near mine at Didipio.
OceanaGold also has 2 producing mines in New Zealand, Macraes and Waihi. Macraes is the largest of the 2, which will produce over 120,000 ounces this year. There was production issues associated with a down ball mill. Maybe you can just give us an update on what's happening with that ball mill and when it will be up and running again.
Sure. Look, in mid-February, we had found a crack in the trunnion of one of 4 mills that we had there. So it was only one of the 4 mills. We had to take that down for repair, which we got in place or completed at the end of March. So the first quarter, it was very much an impacted quarter. In the second quarter, McCraes had a fabulous quarter of delivery. It produced 40,000 ounces at $1,287 per ounce, and that shows what that plant is and mine is capable of doing when it's operating to its full potential. It is a large producer. It does mine at low grade. It's been going for 30 years, but the team there, run the open pit mine extremely well. It's very technically challenging in some respects, but they are showing their technical capabilities and how well they run both the mine and also the plant. So we have announced recently that we are taking the mill, that same ball mill, down for a further repair. That will impact the Q3, but we'll finish with a strong Q4, and we have not altered guidance for this year. So we're really pleased with how the McCraes team have done this year, and again, no change to guidance, and it is well primed for a good year.
And the second mine in New Zealand is called Waihi. It was also impacted this year due to heavy rainfall, but that has since subsided. And is performance back on track?
In short, yes. I mean, that first quarter rainfall was extraordinarily large. They had something like 1.5 meters of rain in 6 weeks, and when you're operating from underground, eventually that rain goes somewhere. So we didn't have access to some of the high-grade material that we expected to have access to in that first quarter. The second quarter was much better. We were able to get access to better grade material, and obviously that translates into better production. We expect an even stronger second half relative to the first half, and that should have benefits in both production but also in all-in sustaining costs. So we're maintaining our full-year guidance for all-in sustaining cost of $1,400 to $1,500 an ounce from Waihi. It's our smallest producer, as I think you said. It's about 10% of our production, but we expect its performance to grow in years to come as well, in a production sense.
And I'm glad you brought that up, because you do have a very aggressive drilling campaign underway with 3 rigs. Maybe you just give us an overview of what you're trying to accomplish.
Well, at Waihi, we have drilling around the existing ore body. That's the Martha underground, and so that's all about extending the operation as it is today. But 10 kilometres away, we have a high-grade deposit called Wharekirauponga. And it has an indicated resource of 660,000 ounces at 12.3 grams per tonne. It's got an inferred resource of an additional 640,000 ounces at 7.8 grams per tonne. So we're talking a very high-grade ore body, potentially, that, subject to further drilling, that we have 3 drill rigs on. We recently got that 3rd drill rig on in July. So we have 3 drill rigs going now. Ideally, I'd love more, but we are somewhat limited in a number and location of drill rigs we can put there. We're targeting to get 1.1 billion ounces of indicated material defined, and that will allow us to underpin the pre-feasibility study work that's underway at the moment, and we expect to release in 2024. But a fabulous prospect to have, given that it is such high grade and reasonably proximate. The Wharekirauponga is about 10 kilometres away from the Waihi plant, and we would be expecting, if it's developed, to basically convey it all the way to that existing plant, and that gives us tremendous leverage to existing infrastructure. But again, what's really exciting about Wharekirauponga is its high grade.
Gerard, you and your team have implemented many steps to increase production and also reduce the all-in sustaining cost. Can you just summarize how these steps will impact production and costs over the next 3 years?
Yeah, look, I think we are a little different and rare indeed in the gold industry. We have a 3-year production growth profile that is unusually strong. We have production growing by around 30% over the next 3 years. That, and combined with a reducing all-in sustaining costs. The primary driver of that is that increase in gold production and the lowering of unit costs that comes from the Haile underground development. again, constant milling rate, but more gold from underground at a much higher grade, 2.5 times the grade coming to a mill, and this at a much lower waste to ore ratio. So we expect that to be both power the increase in production, but also the reduction in all-in sustaining cost. And of course, once we build out the Haile Underground, the associated capex that we're incurring this year to build it will stop, and we have a concurrent reduction in growth capital expenditure. So that perfect combination of growing production, reducing all-in sustaining cost, and less growth capital over the next 3 years, all other things being equal, should drive a dramatic increase in free cash flow. We also, it's not just a Haile story, we also expect over the next few years to have more gold come out of Waihi, albeit, you know, it's a small producer, so from a low base. And then, of course, you know, subject to exploration success at Didipio and subject to exploration success at Haile further, you know, that stronger for longer potential exists in our portfolio.
So you've touched on many of the improvements that you and your team have made in the past year and what you're going to do in the future, but OceanaGold is trading at a steep discount to its net asset value. I've seen some research reports with as low as 0.6 times NAV. What will you and your team do to close this valuation gap in the coming months and years?
Look, there's nothing better than just continually delivering on the guidance that we've put out in the market. I think we are building an impressive record of doing so. You know, we are satisfying our commitments to the market, and that sounds a bit boring in some respects, but that's the key message that we get from our shareholders: deliver on your guidance. And so we did last year. We intend to do so this year. And in time, particularly if we can deliver on the growth pathway that we have communicated to the market, that combination of both proven delivery capability, but also delivering the growth that you have in the portfolio, and that growth that is unique, eventually and sometimes suddenly, you can get that market recognition that should feed through into a higher price to value ratio. You know, but you know, it takes time, and you know, everyone can be certain that what we're focused on is achieving that delivery of guidance in a safe and responsible way.
Gerard, as we wrap up, what can investors expect in terms of news flow in the coming months from OceanaGold?
Look, we're putting the drill rig into a lot of places across our portfolio, and so you can expect that we'll continue to release exploration results that have tremendous leverage potential across our business. We have an annual site visit to Didipio next week, and I expect that we'll get some good notes, I hope, from the people that are coming to our site and seeing Didipio and getting a sense for the quality of the team we have there, the quality of the people we have running it, and the upside potential that exists both from the ore body but also at the plant. In the fourth quarter of this year, we expect to deliver first ore from the Haile Underground, and for all the reasons that I've mentioned, that powers the growth of both Haile and the group's production, the lowering of the unit cost, and then for the free cash flow generation. And yeah, as I said, we'll continue to safely and responsibly deliver on our guidance, because that's the key market expectation. So that's in terms of coming months. Longer term, we have the PFS for Palomino, the PFS for Wharekirauponga, and the optimization study at Didipio, all of which provide, you know, longer term growth potential for the group.
Well, that was a great overview and a great update on OceanaGold. And let me know when you have a site visit to your New Zealand properties. I would love to go there. Once again, thank you.
Thank you, James. Appreciate it.